Alright, good afternoon everyone. Today is Thursday, January 24th, 2013. Let's go over the results in the live trading room this morning. We lost two trades on the NQ. We were minus 15 ticks on the NQ. That's unfortunate, but it's true. But we more than made it up on the other markets. On the crude oil, we were plus 34 ticks. On gold, we were plus 18 ticks. On the natural gas, we were plus 6 ticks. Okay, so we ended up with, excluding commissions, we ended at plus $505 a contract in the live trading room this morning. Let's see. I think that's right. Anyway, 340 plus 180, that's 520 plus 60 is 580 minus 75 is 505. That is correct. All right. If you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for your free trial, and in the free trial, you'll get access to everything you see here. You'll get access to our indicators. You'll get access to our charting platform. You'll get access to our live trading room for 2 hours per day, 5 days a week. Now you'll have a chance to learn the setups. Even in the free trial, you can learn the setups. You know, it's one setup that I do over and over and over and over and over again, all day long. I may trade a bunch of different markets, but it's one trade setup. Okay, so take the free trial if you haven't taken it. If you're on the free trial, there should be something in your inbox to become a partner before tonight's partners meeting. All right, you need to take advantage of that. It does have an expiration date on it, so you need to take advantage of that. All right, I think it's a pretty good deal. Anyway, check that out. All right, if you want to become a partner and you don't know how to become a partner, send me an email at support@cfrn.net. All right. So let's go through the trades, okay? Crude oil, we're plus 34 ticks on crude. I'll show you that. Now, crude inventories came out today. Crude inventories came out, and natural gas inventories also came out. That's why we traded a little natural gas. There was a lot of activity in crude in the pre-market here. You can see there was a ton of opportunity in there. But we didn't get to the crude till over here around 10 o'clock. All right, the market opened up here. There was an opportunity to short crude right here. Now let me bring up my my picture. Okay, I'll bring up my picture. Here it is. When you're looking to go short, did I say short? I did say short. Yeah. Okay. What you look for is the bearish cross, price to pull away from the BBC, come back up and test it and give you a down close, and there to be bearish divergence. Now on the bearish divergence in the actual picture, when you have the bearish divergence, you want the cycle to be red. When you're selling off the BBC, you want your cycle to be red. If, however, price does not hit the BBC, or the cycle is not red, let's say it's blue, like on this one right here, then the close down below these trend lines right here is a spot for you to trade. Okay, right in there was a spot. Over here was the up close, pullback. No test to the BBC. There was just a tiny bit of divergence with an up close right there. That moved up. Again, it came down here, it hit the BBC, and it gave an up close, but the cycle was red, so it needed to close above that trend line. I got long right in there. I took profit right. I actually didn't take any profit. I took break even right over here. Once it had moved up above the MA1, I moved my stop to break even. My next trade was over here. All right, test to the BBC with a down close. I shorted the down close and took profit right over here. After the bullish cross, my next trade was right here, and this was a textbook trade straight from the picture. Okay, it almost looks just like the picture, right? You get your bullish cross, your pull away is step 2. Step 3 is a test of the BBC with a close in the direction of the cross, an up close. Step 4 is look for the divergence. Okay, I got long right in there, I took profit up there. Okay, there was another opportunity in here that I missed. Everything turned around, and there was a shorting opportunity right in here that I missed. It came up here, and I made a mistake here this morning. I took a 3-tick loss on this first one. I'll move the arrows out of the way so you can see it a little better. I got long on the up close according to the rules here, the up close, but the cycle portion wasn't blue, and I didn't realize it until after I was already long. Right here on this up close, the cycle was red, so I shouldn't have gotten long on that. I should have waited for an up close above this trend line. Okay, that's what I should have waited for. So I got out of that trade right over here. I got out of that trade at -3 ticks, and then we got the up close above the trend line. So I got right back into it after this bar closed. I got right back into it here, and I think I took like, I don't know, 10, 12 ticks profit on it, something like that. But originally I had gotten into it incorrectly, so I took a small loss on it. There were a couple more opportunities in here right at the end of the morning session. Right here, there was a great one. Right here at the start of the afternoon session, you have your bearish cross, your space, your test of the BBC, and a down close with a big bearish divergence. All right, just like the picture, over and over and over again. So you would have been getting short right there. Okay, even if you missed that short, you still could have gotten in here, here, or even here. You still could have gotten in there. Okay, that was crude oil this morning. The next one over is the Russell. All right, the Russell 2000. Now we're going to be looking at the same exact trade setup, just a different market. All right. We didn't have a lot of opportunity here on the Russell. Right in the first half an hour we did, but I wasn't paying attention to it, so I didn't see it. Right in here on the way up there was an opportunity, and here there was an opportunity, and right here there was an opportunity. All right. Then you lost your divergence, and everything started to come down. You got your bearish cross, test to the BBC with a down close right here with bearish divergence, and I pointed this out in the live trading room. I didn't have a Russell Dom up this morning, so I didn't take any Russell trades, but right there was the spot to short. Okay, and it eventually gave 6 or 7 ticks, I think. We eventually gave 6 or 7 ticks profit, and the green line got down to the cycles. So, at that point is when you start to bounce off it and move back up. Okay, we got a bullish cross here, a test to the BBC with an up close. We really didn't have any divergence in here. If anything, it's bearish divergence. All right. So there was no more trading to do in there on the Russell. It was just that one opportunity for 6 or 7 ticks profit. All right. Gold. Well, how many trades did I take over here? Before I had made my 2 points, and that's another thing that I want to point out. From now on, I'm going to try to keep track every day of how long it takes me to make 2 points or 2 points equivalent in the morning. Today it took 32 minutes, and 1, 2, 3 trades. This third trade here, my first trade was on the NQ, and that was a losing trade, so I was down $35 on the first trade. So I had to make that back on this one, and then I got my 2 points equivalent right. It wasn't here. It was 10:02 is when I had gotten the 2 points equivalent, so I must have done it on gold. But anyway, we're going to start keeping track of that, how long it takes us to get 2 points equivalent in the live trading room in the morning. Okay, today it took 32 minutes because my first trade was a losing one. So I did the Russell in that one. I was going to pull gold over and look at gold. Okay. On the gold, let's see. Yeah, it was definitely right in here. I had easily made 2 points. I think I had made just about 3 points equivalent here, including the commissions. In that particular case, I was up $145 a contract at that point right there. Taking the loss on the NQ, and 1, 2, 3, 4 trades there, and a couple of trades on the ES. I'm not on the ES, on the crude oil. All right. Basically, it's more of the same stuff, guys. You get your bullish cross, you tested the BBC with an up close. Tested the BBC with an up close. Bullish divergence. You're just looking for the up close off the BBC right here because you had bullish divergence and the cycle was blue. Okay, so you get your up close right there, and it kept going up. Over here, it didn't pull all the way back down to the BBC, and we had red on the cycle, so you needed to close above the trend line. That happened right in there. All right, I missed both of those trades. They're both really nice-looking trades, but I missed them both. I did take a short over here, though. Tested the BBC with a down close with the bearish divergence. I shorted right in here. Took a little profit here. I did it again here, took a little profit here. This was frustrating for me because every time I took a little bit of profit, it ran another 15 ticks. But, you know, I trade the way I trade. And we had little profit here, little profit here, little profit here. Good amount of profit on this one. Okay. Any one of those trades would have been the equivalent of 2 points. ES. Okay. Would have been the equivalent of 2 points. Any single one of those trades. In here we lost the divergence, so we didn't look to trade this piece right here, this leg. Alright. Then we lost it again over here. It changed directions. Right in here was a spot to get long. I missed that one, but I did take this one over here. Okay, I got long right in here. And I took some more profit there. Again, it's the same setup, guys. Everything is the same, no matter what market we're looking at. It's the same thing over and over and over. So if you can do the same thing over and over and over again, then you can do this. All right. There was another opportunity there, there, and there. And let's see, as we got into the afternoon, there was an opportunity here. I don't know. I didn't take it, but I don't know how that would have fared. Let's see, 69.4. So the you would have been looking at 70.2 would have stopped you out. Yeah, you would have stopped out right there, possibly, depending how you have your stop set. But another profit there, another profit there, and then we're getting out of the morning session right in here. Okay, so there was just a ton of opportunity on gold this morning, just like there was on crude oil. And the same thing happened over and over again. The NQ, my nemesis. Alright, I think I took a few trades on the NQ this morning. My very first trade right out of the box was here. And this was a test of the BBC. After the cross, we tested the BBC and gave a down close. I got short on the down close, and it stopped me out pretty much immediately. So I was minus 7 ticks on that. Alright, now typically my stop is 8 ticks on every single trade. It was on that one too, but it slipped me a tick in my favor on the stop out. Anyway, it's just how it panned out. So I lost that trade. I missed this one, and this one. Any one of which would have gotten me back my money on that one. I missed this one as well, which would have stopped out again. I did take the next one over here, though. I shorted over here on the down close, and it stopped me out right there to the tick. Then I shorted it again on the close below the trend line, and I moved my stop to break even, and it took me out of break even, then reversed. So I lost 8 ticks on this one and 7 ticks on the first one. That put me down 15 ticks on the NQ. I tried to get some back right there. It didn't happen. Then I missed this trade. It got very choppy. I missed this trade. I took this one and took a break even on that one as well. Alright, and that brought us into the end of the morning session. You can see in here, now that we've had some divergence in here, there was more opportunity here on the short side for the NQ. So if I had just been trading the NQ and if I'd have stuck with it and focused on it and just traded every NQ trade, we would easily have been up. You know, we could have taken the NQ from any one of these markets. I mean, the 2 points, we could have taken the 2 points equivalent from any one of these markets except the Russell, it looks like, so far. Because the Russell, I think, only went 7 ticks from the entry. But every one would be profitable, though. Okay? And that was the NQ. The NQ was my tough one this morning. Soybeans, there were a couple of opportunities in soybeans, so I didn't take any. Right here at the open, we had a down close with bearish divergence. Okay? Bearish cross, space, test, down close, divergence. And down it went. And there was another one over here that only went about 4 or 5 ticks, and then it turned around. There was one up here. Had you taken it, you definitely would have stopped out on that one. That one didn't have any movement, any follow-up at all. Alright, and those were the soybeans. Let's see, on the ES, I'll point out where I had an entry right here. There was an entry right here, and I know Pete took this entry this morning. And Pete took this entry this morning at 93.25, and it ran right up here. Now I want to also point out Dwayne's tweet last night. If I can find it. Hold on, let me find it. Just give me a second. I'll find that tweet. Or maybe I won't. Here it is. Tweet alert. We like points. Here it is. Consider being long above the ES at 1487. Hang on. I'm scrolling down. I think there was something else. All right. Consider being long the ES at 1487 is what it said right here. Okay. Dwayne sent this tweet out at 1:25 a.m. last night. Consider being long above on the ES above 1487. And you can see how well that worked out. Okay. It went 10.5 points. We had an entry in the live trading room this morning that was right in here. That went several points. We didn't have any other entries on the ES. It was just that one entry we had. Okay. But I wanted to point out Dwayne's tweet right there at 1:25 a.m. All right. Let's jump back over here for a minute, and we'll see what else do I have to show. The 6J, we didn't trade anything on the yen this morning. I didn't really focus on it all that much. I was pretty well focused on crude oil and natural gas and stuff like that because they had news events today. The yen was really active in the pre-market. It wasn't all that active once the markets opened up. There was something on the 6E. I don't know if I got rid of everything, but one of the partners in the room this morning, she had asked to take a look at the 6E, and when it populates here, we'll take a look at what we didn't do on the 6E. I think it was right in here she had asked. Yep, it was right here. She had said, will you take a look at the 6E? And I did, and I drew this trend line, and I said the entry is the up close right here. All right, the up close, because everything was blue on the up close. We had bullish divergence. I did caution that we had a triple top right here, and that if she got into it, the triple top might be as far as it goes. When you get into one of these trades, you look for the divergence, okay? And when you have this divergence, the green line is going to move up into the cycle. That's typically how it works out. When you have divergence, the green line is going to turn around and work its way up into the cycle. So, in answer to your question, Gary, the green line doesn't go in the same direction. Well, it goes in the same direction on the pullback. So, once it starts moving in the direction that you want it to go, well, then that's a pretty good indication that it's going to go all the way up into the trend line. But your entry is usually before it moves in that direction. Okay. This one here worked out much better than just that swing high right there. Okay, it ended up going way up there, and then everything turned around, and there was another opportunity to short it right here. Okay, right there. All right, that was another opportunity to get short on that. Now, I didn't trade it. I didn't have one of those DOMs open. Okay, but natural gas. Now, I think I took one trade or maybe two trades on natural gas. Maybe just one trade on natural gas. But you're looking at the same exact thing. And today at 10:30, the natural gas numbers came out. So you can see there was a whole bunch of bars in there between 10:30 and 10:31. I wanted to let it settle down a little bit before I got involved in it. And here we had, just look at the picture, guys. It's picture perfect, right? A bearish cross. A bearish cross like that, step one. A pull away, step two. A test to the BBC. And a close in the direction of the cross was step three. That was the down close right there. And the entry was, it was actually up here on the down close. It looks like I entered down here, and I took 6 ticks profit on the trade. You can see it kept going down. There was another entry right over here, continuation entry. The close down below the trend line, you could have entered there as well, taken some profit there. You could have also entered right here and taken profit here, okay, if you wanted to. And that was natural gas this morning. There was, well, I just showed you a couple of trades. The one that I took where I took profit on it, though. Let's see. Right here we have, we didn't actually hit the BBC, so you had to wait till you got to close above the trend line, so you could enter it in right there on that close above the trend line. Okay. Taking some profit on that move up. Over here, you would have had to redraw the trend line several times. It would have ended up like this. I'll show you. Now the first one, you would have originally drawn like that. Then you get a wick above it. So you had to redraw it like that. Then you get another wick, so you got to redraw it again like that. All right. By the time you get an up close above that trend line, well, you didn't actually get one. Everything turned around and there was no opportunity. The next spot was right over here. Okay. You see down here on the bottom, you have all this bearish divergence, and here's your trend line. All right. So the down close was right there, and that was a beautiful trade right there. Okay. Over and over and over and over and over again, this happens. Let me just point out the important things that you need to have. You got to have a BBC, which is the green line. You got to have the MA1. The black line I use to keep me out of trades, keep me out of trouble. You can also use it as an entry filter. We can get into that some other time. And you have to have the slingshot. You have to have the slingshot. And the slingshot is something only we have. Actually, all of it's proprietary. But the slingshot, you got to have the slingshot with the S1 fast on set to true and the S3 cycle on set to true. Okay? Those are the things you need to have set to true on the slingshot. All right? That is that. That was our morning trading. And with that, I am going to say if you have not taken the free trial and you want to take the free trial, go to www.cfrn.net/apply. Sign up for the free trial. If you have taken the free trial and you want to become a partner, you want to get into the into the partners meeting tonight, you need to take advantage of the offer that was sent to you in an email. Okay? Sent you the whole thing in an email. Just go in there, check it out. If you don't have it in your email, if you can't find it in your email, then send me an email at support@cfrn.net. All right? That's it.